Hi everyone, welcome to the 23rd module of GKToday's Banking Awareness course. Today's topic is RBI functions and regulation of banks. I'm Ritrisha from GKToday and let us begin. Which of these banks is regulated by Reserve Bank of India? And the correct answer is all of the above. One of the most important functions of RBI is to work as regulator and supervisor of the financial system in the country. The financial system in India includes commercial banks, regional and rural banks, local area banks, cooperative banks, financial institutions including developmental financial institutions or DFIs, as well as non-banking financial companies or NBFCs. Which RBI department regulates the non-banking financial companies? Correct answer is DNBS, which stands for Department of Non-Banking Supervision, which is in charge of regulating and supervising non-banking financial companies. Similarly, there's a Department of Banking Operations and Development, which frames regulations for commercial banks, and a Department of Banking Supervision that undertakes supervision of commercial banks, including local area banks and all India financial institutions. There is also a separate body for regulation of regional rural banks. It is known as Rural Cooperative Banks, and it is done by Rural Planning and Credit Department. I beg your pardon, it's known as Rural Planning and Credit Department, which regulates regional rural banks. And these banks are, however, supervised by a separate body, that is NABARD. What is the full form of OSMOS? Correct answer is Off-Site Surveillance and Monitoring System. The RBI requires banks to submit detailed and structured information periodically under OSMOS. On the basis of OSMOS, RBI analyzes the health of banks. What is meant by KYC? Correct answer is Know Your Customer. So there are a few anti-money laundering norms under the RBI. KYC norm is one of them. There's also anti-money laundering or AML and combating financing of terrorism or CFT. These are a set of guidelines which are some of the major issues on which RBI keeps issuing its norms and guidelines. What is the primary objective of DICGC? We have studied this on the previous video as well. Correct answer is to protect the interests of small depositors. So DICGC or Deposit Insurance and Credit Guarantee Corporation is meant to protect the small depositors in case of bank failure. It insures deposits up to rupees 1 lakh, and in case the bank goes bankrupt or it fails, the depositors are given this 1 lakh as compensation for whatever money they had deposited. Something that we can note here is India has one of the smallest amount insured. So it doesn't matter whether you had say rupees 1 lakh deposited or 1 crore. The maximum insurance you can get for it is rupees 1 lakh. Which of these ratings is used by RBI to rate the banks after annual on-site inspection of banks? The correct answer is CAMELS. RBI undertakes annual on-site inspection of banks to assess their financial health and to evaluate their performance in terms of quality of management, capital adequacy, asset quality, earnings, liquidity position, as well as internal control systems. And based on these findings of inspection, banks are assigned supervisory ratings, which is known as the CAMELS rating. It is a recognized international rating system that bank supervisory authorities use in order to rate financial institutions according to 6 factors that is represented by the acronym. What is the population limit at a place under which the banks do not require a license from RBI to open a branch? Correct answer is 50,000. To do business of commercial banking in India, whether it is in India or it is a foreign body, a license from RBI is required. Opening of branches is handled by the branch authorization policy, and at present Indian banks no longer require a license from RBI for opening a branch at a place with population of below 50,000. Which of the following comes under statutory preemptions? We have learned about statutory preemptions yesterday, and the correct answer here is both A and B. Each commercial bank is required to maintain certain portion of their net demand and time liabilities in the form of cash or any other securities with the RBI. The cash part is known as cash reserve ratio, and other forms such as approved securities, gold, etc. are known as statutory liquidity ratio. They all under the bracket of statutory preemptions. Who was the chairman of the first Banks Board Bureau? Correct answer is Vinod Rai. Banks Board Bureau is an autonomous body of the Government of India tasked to improve the governance of public sector banks, recommend selection of chiefs of government-owned banks and financial institutions, and to help in banking developing strategies and capital raising plans. The first BBB was set up in February 2016 under chairmanship of former CAG Vinod Rai for 2 years term that ended in March of 2018. Bhanu Pratap Sharma is the new chairman of the Mumbai-based bureau, and it is housed in RBI's central office in Mumbai. The BBB was the part of Indradhanush plan of the government. Which of these is not a parabanking activity? Correct answer is cash withdrawal, which is a banking activity. Parabanking activities are those activities which do not come under the traditional banking activities. Examples can be asset management, mutual funds, insurance, merchant banking, factoring services, venture capital, card business, equity participation in venture funds, and leasing. The RBI has permitted banks to undertake these activities under the guidelines issued by it from time to time. That's all for this video. If you liked it, don't forget to like the video and do share it with your friends. Keep subscribing to GK Today for more such content. Until next time, goodbye and good luck.